Have you been struggling with your credit score? Either your credit score keeps dropping or your credit score doesn't go past a certain point. You're just having issues really trying to understand why your credit score is stagnant or your credit score just doesn't increase. On today's episode, we're going to cover that. One of the biggest reasons that I finally have figured out that consumers are confused about is because everywhere you look at, you're being fed the wrong information. Now, what do I mean by that? Now, the number one thing that consumers do is they focus on their credit score, which is fine, but understanding that your credit score is just a one part of a major factor that is really going to determine your credit worthiness. The problem is everywhere we turn, we're being fed the wrong credit score. So when you look at a credit score that is not correct, it makes your mind think completely different. For decades, we've been fed a Vantage 3.0 credit score. More than 90% of consumers really believe that Credit Karma is their credit score. I went on a campaign the last 2 years to try to break this myth and make consumers understand by publishing videos over and over and over again, talking about Credit Karma not being your credit score. But I was missing something and I didn't understand what it was. It's not just Credit Karma, because let's talk about a great example, which is Capital One. I'm a big fan of Capital One because it allows people to start to rebuild their credit. But the biggest problem with Capital One is the fact that, guess what? They're serving you a credit score that is not a FICO score. They have a free app inside of their system called CreditWise. Now, CreditWise is a Vantage 3.0. When consumers see that little itty bitty writing underneath it, they don't really take it into account as to what that means because nobody understands what a Vantage 3.0 credit score is. A Vantage 3.0 credit score is not used by any lenders. So why is it that these companies keep feeding us these scores? It's not just Capital One and CreditWise. There's another one, a massive one called Credit Sesame. So they are also feeding you a Vantage credit score. So it's like, why are they feeding people these Vantage credit scores? It doesn't just stop there. Of course, it's Credit Karma. We talked about that. And then you have Navy Federal. I'm a huge fan of Navy Federal. But every time I see that they're offering to show me my free credit score, I say, oh, well, let's see what this is about. And I open it up and I see Vantage 3.0. So I think to myself, why do they keep serving this to people? Well, the reason being is because FICO is the company that created your credit score. That's what lenders truly use. And lenders are looking for a specific industry score. So for auto loans, they're going to be looking for a FICO 8 auto. Okay, remember that. For auto loans, they're looking for a FICO auto score 8. That is very important. That is an industry score. Okay. Now for credit cards, they're looking for your bank card score 8. That's what all lenders are going to use. And for mortgages, they're going to be looking for your FICO 2, 4, and 5 for mortgages. Okay, sometimes 2, 3, and 5. It's kind of a mix. But those are the ones that they generally use. These are called industry scores. Now, the problem with these apps is consumers don't understand that they have to pay to get access to that. And then they have to take that and transfer that fee over to a consumer. So a consumer's not going to want to pay $40 to see their FICO credit score. So these big companies say, it's not a big deal. It's still going to help them, grow their credit score, not understanding that we keep feeding the wrong credit score to consumers. So when you see your credit score on Credit Karma, every time you pay your credit cards down, your credit score goes the opposite way. It goes down instead of up. But if you look at your FICO score and your industry scores, your score goes up when you don't carry a bunch of balances. Consumers are really confused to think that it's okay to carry up to 30% utilization. Understanding that utilization is not how you use your credit cards. No, understand this. No lender wants to see balances on your credit score. Okay, on your credit reports. Utilization makes up 30% of your credit score. Payment history makes up 35. That's 65% of your credit score. The majority of credit reports have late payments. If you had a late payment in the most recent 24 months, it's crushing your credit score. okay? And then to top that, you're carrying high utilization all the way up to 30%. And you think it's okay, but it's really crushing your credit score. So the number one thing that I see is people are carrying balances and thinking it's okay. A balance on your credit report is the balance that was reported at the end of the month. When your statement closing date closed, let's say hypothetically it was the 20th. Your statement closing date closed on the 20th, and then 3 to 7 days, they reported that balance to the credit bureaus. So if you paid off your credit card right before your statement closing date, and then you used it, you just put a new balance on it, okay? You need to create a 7-day buffer, 7-day window to make sure that you don't use that credit card after the statement closing date closes, so it reports zero balance. There's nothing wrong with reporting zero balance. As a matter of fact, that's the first peak that you're going to hit to see the highest point that your credit score can go to. And this is the confusion that consumers just don't understand. So the first thing you need to do is you need to pay down your credit cards all the way down to below 9% utilization. The moment you cross the threshold of past 9% utilization, you start to bleed points. So if you've been carrying, 20 to 30% utilization and your score is stagnant, this is the number one reason why, okay? So immediately start paying down your credit cards all the way down to below 9%, and you're going to watch your score rise when you look at a FICO score, okay? Now, first, you need to understand, where do I find my FICO score, right? There's a lot of different options, so let's cover that. The number one option, of course, is going to be MyFICO. Okay, myfico.com is going to show you all of your scores. I mean, it's an insane amount of credit scores that they show you, okay? But it's going to show all of them to you. That's the great thing about it. But it's very expensive. It's like $39.99 for the plan that you need to see all of them. The second best option is going to be Experian. Experian is going to show you your top general score for free, only for Experian. That's on a trial basis, okay, for free. You can see it the entire time for free. If you do a trial, I think they'll do a 7-day trial for free to see all of your scores. But after that, it's $20. We've seen different variations in certain different regions for whatever reason. I don't know why, okay? But I've heard people tell me that theirs is $24.99. I'm like, what? Why? Like, mine is literally $19.99. That's really weird. So be aware that determined by your region, I don't know why, that's how it is sometimes, okay? Now, the number one thing that I like to promote and talk about is My Score IQ. My Score IQ lets you pull your credit scores for $1 on a 7-day trial, okay? Now, it's going to show you your Experian industry-specific scores, your FICO 8 Auto for cars, your FICO Bank Card Score 8 for credit cards. Yes, for credit cards. I don't know why I just had a brain fart. And then your FICO 2 for mortgages, okay? Now, whenever you go apply for something, they're going to take all three of your scores, your industry-specific scores. Let's say you go apply for a car. They're going to be looking for your FICO Auto Score 8. They're going to take it from Experian, Equifax, and TransUnion, and they're going to take your middle score. Not your highest, not your lowest, but your middle score, okay? That's what they're going to take, because all of your credit scores are not going to be exactly the same, and that is normal. A lot of people say, why are my scores not normal? It depends on your credit report. What's on your credit report, okay? They're not always going to be the same. Never forget, last part's the most important. Now, you need to pay down your credit cards. I cannot stress that enough. We just covered that, okay? Get your utilization all the way down to below 9%. The moment you start paying them down, your score is going to immediately increase. And you're going to see this. You're going to be like, oh my God, he's right. Okay, so that's the first thing you want to do, is get them all the way down to below 9%, okay? If you can get your credit score all the way down to 0%, you're going to squeeze out as many points as you possibly can out of your credit score. Now, every single section on your credit score, there's 5 of them, okay? You can get a certain amount of points for. So payment history, the maximum amount of points per that category you can get is 192.5. I'm going to put the little infographic up here on the screen so you can see it. So on 192.5, okay, you want to make sure you have no late payments in the most recent 24 months, because that is high impact and destroys your credit score. So controlling payment history, making sure you make on-time payments. Credit utilization is the balances that are being reported. you can get up to 165 points maximum per the category. Always staying below 9% utilization, okay? Credit age. The more age you have on your credit file, the more points you can get. The maximum amount that you can get for that category is 82.5 points, okay? Making sure you're not always applying for credit. This is another reason why some people's credit score stays stagnant, because your age of credit keeps dropping. Every time you open up a new account, your credit score drops because you're reducing your average age of credit. And it's important for you to keep it active, okay? But understanding you need to not apply and get so much new credit all the time. People that have an average age of credit of 5 years or more are going to have a very high FICO score. It's been proven. Now, the next one is credit mix. You can get a maximum amount of points with credit mix of 55. So 55 points you can get from the category of credit mix, okay? What does credit mix mean? That means the mix of credit that you have on your credit file. Installment loans, revolving credit. What type of revolving credit do you have? You can have 2 major banks, okay, regular revolving credit cards, a charge card, a medical card, okay, and then a store credit card, okay, and then there's also a store credit card with a Visa logo, meaning you can use it at different places. You don't have to have this on your credit file, okay, but that is what a mix of credit really means. You have a different mix. Installment loans are not just one type of installment loan. There's auto loans, there's mortgages, there's student loans. A lot of you have student loans that have massive age on them that are helping your credit. So that's important to understand. Now, the final category is inquiries, okay? Inquiries make up 10% of your credit score, and it's 55 points. Keeping those inquiries low is very important. Now, understand this. People freak out because they have a lot of inquiries. You need to stop applying for credit. Why are you applying for credit? Okay? You need to understand that. But inquiries don't hold so much weight on your credit score. After 6 months, your score is rebounded. If you apply for a new line of credit, a credit card, whatever it may be, you're only going to lose up to 3 points. If you get declined, you can lose up to 6 points, okay? But your score starts to immediately rebound, and then they fall off your credit report in 2 years. So focusing on these categories and controlling all of them is going to help you maintain your credit score and get you to where you need to go to. But balances and payment history, you know, those 2 categories is what you can control. Paying down those credit cards, I cannot stress it enough, it's going to raise your credit score immediately, your FICO credit score. Not your Credit Karma credit score, okay? But your FICO credit score is going to rise the moment you pay down those credit cards. Now, you need to see your FICO industry score so you can see the difference. You get that top score for free, okay, on Experian. You can see Experian's top score for free. My Score IQ, link is going to be in the description, and I'm also going to put it in the comments. I'm going to pin it at the very top, okay? Go look at your industry score so you can see a huge difference. Especially if you're in the market to purchase a home, you need to understand how your score has a massive difference. Your FICO 2, 3, and 5 or your 2, 4, and 5 mortgage are completely different than that top free credit score that you see on Experian or My FICO. You need to look for your specific industry scores. My Score IQ is going to give this to you for $1 on a 7-day trial. Link is in the description. Link is going to be pinned at the very top comment. So go get that on a trial so you can see that difference. And I want you to understand the difference in your credit scores. Stop using Credit Karma, and always remember that using these credit scores, okay, that are free are not giving you the right credit scores. It's hard for us as consumers to grasp the fact that we have to pay to see our FICO scores. I think it's a scam. I don't think it's okay. I don't think we should have to pay to see our FICO scores. But it's a privatized company that has cornered the market, and there's nothing that we can do about it, unfortunately. Okay? But understanding and arming yourself, share this with your friends, share this with your family, let them understand how to control their credit score, because we weren't taught this in school. We were never taught what a credit score is. How do we get our credit score up? How do we maintain this? How do we control it? Sharing this information with your friends and family is going to be so impactful and so powerful because nobody understands this. This is the number one part that I coach my clients in. And if you're having credit issues, we have 2 awesome products for you that you can get that we'll put in the description also. You can sign up to work on your credit, okay? I do coaching calls with my full service clients, one-on-one. You're always going to be able to talk to me. And this is the number one thing that I really hammer into my clients' brains is focus on controlling your utilization and controlling your credit score. This is the most impactful thing you can do. Everything else is going to fall in place. You don't have to apply for credit. You don't have to go get a bunch of credit cards. But grasping this very important part is going to be very important, and understanding and controlling it. Once you take the power back, nobody can control your credit score except for you. So I'm giving you the power to take it back. Work on your credit. You can do the do-it-yourself program that we have that went live, disputelikeapro.co. Okay, we have created the system to be very low cost, so you can start working on your credit immediately. Stop using those template letters that get you nowhere. Now, people think that template letters help them and they get deletions. The only reason why an item got deleted when you use a template, because it was inaccurate, it was not complete, and it couldn't be verified. That's the reason why it got deleted. So you're going to hit a roadblock, but with this system, we create custom Metro 2 letters per every client. They're never going to see the same letters twice, okay? And guess what? A very low cost of $50 a month. My team creates the letters. Once we get all of your information, everything we need to create your letters, my team gets to work, creates your custom Metro 2 letters. They're going to email them to you. All you got to do is print them out, stuff them in envelopes, and send them out certified mail, and you're done. You don't have to be a pro, but you can dispute like a pro at disputelikeapro.co. Now, that's going to be in the bio, but listen, I want you to be empowered and take control of your credit score. This is very important. Control your payment history by getting on-time payments all the time, okay? And if you have late payments, work on it. There's two options you got, okay, to work on your credit score. Now, the next one, control your utilization. The balances that are being reported, control that, okay? Let it report zero balance and keep your score at the highest peak. You do not have to be in debt to have a good credit score. I promise you, I've been doing this for so long, over a decade and a half now. And I want to empower you to take control of your credit score. Take control, get your credit score back. Stop looking at those free credit scores. Stop using Credit Karma. It's trash. All these free credit scores are not your credit score. Take control of your credit score. And make sure that you hit that subscribe button. Make sure you hit that comment. Drop some comments in there. Tell us if you paid down your credit cards and your score jumped up, okay? When you were looking at a FICO score, okay? Remember that. Pay down your credit cards. Get that on-time payment. Comment. You know, if this helped you, comment, okay? Tell us how you feel. If you got some questions, you got some other videos you want me to make, throw them in the comment section. Make sure that you subscribe so you can increase your credit score.